Hello, welcome to another weekly market review. Today is the 6th of July 2020. We've closed a new quarter. Bitcoin is making historic volatility lows and Nasdaq is making all-time highs. Let's have a look at what all we can play with it. So here's the total market cap chart. We closed 3 red weeks and we finally have some stabilization in price. We have a green week, of course, without any confirmation and with very low volatility. Let's look at it on the daily. So on the daily again, essentially we've had a pure sideways week. We never ended up closing outside of the Monday's highs or lows, so essentially this is the Monday's high and the Monday's low. You can see price never closed outside of it, so it was a sideways week, and the confirmation that we were looking for either direction has not been found. What I said before, it remains the same. We need to first start finding support here. If you are bullish, this is a key VWAP along with a big daily level, but the real confirmation is again after 265. But as a play, I would say that if you do start closing above here, you can first trade price up to the 265 level, which would be a nice place to manage risk. Once that turns into support, we can start looking at the higher levels that we were watching. I have covered this before. Just quickly, I want to look at the weekly and tell you how strong this 285 level is. This weekly block is essentially what has led to this move, and when we look at blocks and we look at consolidations, we rate them according to the volatility and the magnitude of the move, and for both this has been absolutely phenomenal. BTC has not seen a move like this, so you can understand how significant this level is. And of course, on the first test of it, it should not have been expected for price to get back above it. So this is a very significant level. On the total market cap, it does not look as similar on BTC. So that is why I'm showing it and mentioning it over here. So apart from that, I think our analysis is on point. This is what we were looking at last week as well, to look at this 4-hour block on the total market cap and be able to manage risk from here. You can see we did get a couple of moves into it. Both have given nice reactions as of now, and what I would say is that yes, if you did not manage to get in or manage risk from here, which is anyway, it should be a short-term play for now. You do not have upside confirmation, so there is no need to be overly aggressive down here while looking for upside. But you can see we have a bit of a complex head and shoulders that is building out over here as well. So I think a break and a retest would end up giving a nice move, at least. And if we take a measured move, I'm sure it's beyond 265. This is just showing a breakout. So this is pretty interesting. The complex head and shoulders does end up showing a big breakout, and I think if BTC has to make this move, then we end up getting continuation, and this move goes significantly higher. So this is something for you to keep in mind, and it is as significant. What you should be looking for is a breakout on volume. Essentially, if it doesn't just happen right now, what I could say is that since we are so correlated to the indices, there is still a potential of some kind of a pullback. And if you think that these wicks are bullish and you still do want to take a position before confirmation, though that is something that is not highly recommended, but you could still turn it into a risk adjusted short-term play. So I would say that there is still a potential of a bit of a consolidation wherein you do get a retrace of this aggressive move that we have gotten at the starting of the week, and then you can um, compound on the breakout or take profit at this big resistance level, and then once we do retest it, you can play for either this complex head and shoulders, but first of all this big weekly 265 level. So here's the altcoin market cap. You can see the weekly, it's performed a bit better than the total market cap, which means even now the alts have been performing better than BTC, and that has been the case since essentially end of April. While BTC has been consolidating, the market makers have been making more money by moving the odds against BTC. What is to be seen is that once BTC does get impulsive, what happens to altcoins, what happens to these alt BTC pairs? Do they take a big hit? Because if we are looking at seasonality, it is now July, and it has never been since the inception of altcoins that post at least the second week of July that altcoins have done well against BTC. So it will be very interesting to see. Nonetheless, still outperforming. Weekly close is pretty good. Let's get down to the 4-hour, because we've had a sideways week on BTC, but you can see that alts have slowly been grinding up. There's a couple of key channels right here, and we have broken above the middle of this channel, and currently we have closed above it. So this is quite a good sign. And what you would want to do is, if we do end up getting another retest of this level, the bottom of this channel, which is in confluence with the middle of this channel, you could end up managing risk from this daily level, because right now we've just been in a tight range. But you can see the slow grind up. Either we break up above this is big resistance right now, and start finding support. You can see it's very clean levels over here. Resistance, broke up, failed to find support, and came right back down, and currently still finding resistance all the way up here. So I would say once this flips into support, because you can see previously it was support right here, once this 90 billion flips into support, there's a decent probability for continuation. But in terms of downside, if you're looking to manage risk, this is good confluence. The bottom of this upward channel and the middle of this channel, which is almost shaped like a bull flag. So BTC has been going sideways, and if you're looking at classical patterns, what we have is a complex head and shoulders, which has completely not been negated, because we did not break down below the neckline. So we have a complex head and shoulders, and we also have a flag. And if you want to look at the target for the flag, this is the more aggressive target, but this breaks the big half yearly level. Essentially this would mean that this is a big breakout, also going above the February highs. So that's quite a decent move. If this does end up breaking up with volume, it's offering a decent 27, 30% move. And if we look at the more conservative target, it still gets to the half yearly level, 110 billion, up from the breakout of the flag, which is another 15% move. So this is pretty clean, and it's quite decent. It's not been negated. So also interesting, you want to look at the head and shoulders target, that will be even more conservative, which takes us to about 100 billion. So we do have three targets, the most conservative and the most aggressive. This is all with your classical charting. I'm giving you a game plan for potential entry when total 2 hits here. And essentially the way to play this chart is, guys, that when you see price hitting some key levels, you should be looking to play relative strength, gauge your odds, look at the ones which are stronger in relation to the large caps or in relation to BTC, or essentially you should be able to gauge relative strength with the large caps. I think that's a nice way to gauge it and find the stronger ones, and you get this retest, manage your risk, and chart your individual coin, but just know where the point of value for the entire market cap of altcoins is. So you do know when to pay attention to your individual chart with a macro context. Here's BTC on the weekly. This was a sideways week, and even though the candle did close slightly below where it did open, we did not break the lows of the previous week. This essentially means that price has been stabilizing. This weekly block has what is basically the top of this weekly block has what has provided support right here. If we drill down to the daily, so on the daily, this VWAP again has been golden. This daily block, which is in confluence with that, the top of that weekly block, this is very significant. Also, this daily block is significant, guys, because this is the block that has led to making a higher high over here. So essentially, if we do not close below this 86.30, so we couldn't have a higher high and a higher low, like this being a very complex correction. So it is possible that once you do get continuation, this is the higher high, because this block is again and again it's proving to be significant, of course, in confluence with this VWAP. So this is something to look out for, and this is something that the bears should be a bit nervous about. I do not see, again and again I see so many people, they're shorting heavily down here, and they're trying to take price, they're trying to take price to new lows, and eventually one side of the range, this has to be successful. But while this is a range, just shorting support or longing resistance, it just does not make any sense. And I think that I don't know if the bears are learning their lesson yet, or they're still piling on, but you can see a lot of this pressure has been absorbed. The volume weighted, all the CVD, the cumulative volume delta, that has been showing excessive selling, which is not reflecting in price. So essentially price is getting absorbed right here, and again, the selling is not on heavy volumes. The heavy volume selling has already taken place, and it has been absorbed at higher prices. As we have been descending price, the volume has been declining. So this is not something that the bears want to see. You want to see an increase in volume as price does end up coming down. So this does give me that slight bias towards the upside, but nonetheless the bears, this has just been pure sideways. So until this 9300 level is taken out, you cannot have a clear trade. Yes, you can be scalping bottoms here. There was a play which I will show you. I did mark it out for our Discord. I haven't been chilling the Discord enough. That's what somebody else was telling me. We've been having some really nice plays. I'll try and look for a few of the calls that I've been making throughout the week. There have been some really nice plays, even for altcoins and for BTC. Again, this is the level that I was looking at for some place to manage risk. But essentially it's Monday, guys, so those are again low time frame plays. For a higher time frame, you can very clearly see this is resistance. It was support for a long time and it has turned resistance. You want this level to flip. That is the play you can take for, first of all, this 9580 level. This is the resistance. But if you really want to be looking for upside, look at how strong this resistance, this 9800 level is. I think bear cases, for a lot of bears, their bear cases would get negated once price does find support over here. But if you're trying to get in early, this is a nice place. This has been a clean support resistance flip. This flips into support. You have a nice place to manage risk. It's a strong level. and once it turns back into support, you manage your risk from there. For lower time frames, yes, they can be some plays here, but this is again, it's low time frame unless you know what you have to do, or if you are looking for a swing trade and you have been accumulating at this VWAP, you have a very clear negation below 8600. So this is another swing trade plan. What I end up giving you is something which is more defined and more risk adjusted, and it is slightly mid-term time frames. But a higher term time frame, this level has been giving great reactions, and there is no daily closes below this. And I did tell you that this is the big place to be managing risk. So you could be accumulating here, because right now, until it's proven otherwise, it does look like somebody else's. Look at the VIX, all the way below 9200. Look at each time price has come down heavy. It's just been eaten up. So it does look like somebody is accumulating here. So your very high term time frame trades, you could adjust, like, and a buy of anything below 8900 with adjusted risk at 8600 is not so bad. But what we want is first strength, and what we want is for price to be proving itself, and that is why this is where price will prove itself, a reclaim of 9300. And this is definitely going to give some kind of a reaction. There is no definites in trading, but there is a decent probability that we do get some kind of a reaction from this 95, 80, 90, 9600 level. But once 9800 is taken, I don't think bears have a case, and you would see a lot of bears negating whatever concepts of distribution they have. They would completely be negating it up here. So for BTC, yeah, for now, this is the game plan on the 4 hour. So this is what I gave out in the Discord, that this level, for price to come back here, get a good reaction, and build some kind of a consolidation. So this could still come back down. This could still come back down to 9Ks. There is a H4 block right here. I will mark it out. So this could still very well come back down and test this block, and then make its way up. Nonetheless, you have confirmation up here. You want to take a low time frame risk adjusted trade, you can take it. If this block holds, you can take it with managing risk from these lows. But really, if you're looking for a higher time frame trade, you want price to reclaim this level. Another quick thing I want to mention on BTC is that since the historical volatility percentile is so low, regardless of directionality, considering what we're doing with the volume, I'll just quickly show it to you again. But this declining volume right here, it is set to resolve pretty soon. It is a decent probability that it could happen within this week. So you could be going long volatility here, guys. Either you play, if you play options, you could be playing a strangle or a straddle, and if you have FTX, then you can be longing the weekly move contracts, because then you do not need to decide which way this breaks. You could be playing just volatility. The possibility of getting a move out of here, it is increasing as we carry on, the longer we stay in this. But essentially, just with this declining volume, it is giving a hint that this could be the week, guys. And this is very nice, risk adjusted, free of direction play, and you should look into it. If you do not use these move contracts already, you do not trade options, this is something that you significantly need to add to your trading toolkit, because very important as a trader to become more sophisticated. It's not just simply about technical analysis, guys. Volatility and understanding how to play that is as significant and is as important. Here's the Dow Gold. This is the daily block we are looking at. You can see instantly we got a very nice reaction from it. It was a strong Monday. We had a bit of a choppy week, but you can see we're getting continuation over here. And we're reclaiming the level that was lost essentially. So this head and shoulders kind of gets negated without getting to the target. But that was something that we were anticipating because the Nasdaq has been making all-time highs, and every week I've been showing you metrics that show a possibility that there is still potential. We might get another leg up before getting a correction, and before this market eventually does stabilize. So for now, this is what it's reflecting. We're breaking back above. What we want is for price to hold this level again. Essentially this breakout block. We want price to hold this again to get that next continuation. For the SPX, I had suggested last week that this is a very nice place. The confluence of these 55, the 100 and the 200 EMAs, and along with this daily level, is a very nice place to manage risk. And you can see that we tested the 55 right there and built a very nice move from there. It's about a 6% move from the bottom right here. So congrats if you were able to manage your risk and get in and be risk on, because it was a very nice week. All of last week and the week before, I was showing you a lot of metrics that were reflecting that there is a decent probability that we may end up getting another leg up. And essentially it looks like for now this is what we are getting. We are well above the VWAP from the highs. What you want is for price to stay above this, so it is guilty until proven innocent. And for now this does look like continuation. It is possible that we get the potential for another strong week or two heading into the middle of July, wherein seasonality reflects that we do end up getting a bit of self pressure. So let's see if this holds true, and let's see if we do end up continuing to get strength in the indices. We do know that BTC does have a correlation, and we have been looking due to this correlation for BTC to also make some kind of a move. So I think we have a very interesting week and a very interesting 10 days ahead. But nonetheless, if you managed risk with us watching last week's review, congratulations. I think this is going to be quite significant and a very nice week to have nice gains. Nasdaq is still at all-time highs. So for now, I think until this level is taken down to the downside, I think these markets are very much risk on. So every weekend I'm coming to you with certain metrics that the institutions are looking at to tell you why they would be looking for buying the dip and why the markets are still very bullish. So here's another one that we're looking at. We basically had the best quarter for the S&P 500 since 1998. Alright, so you can look at plus 20% quarters. There are not so many, and what we've had over the next quarters is all green, so this is something that you have to keep in mind. Also we have the presidential year. I did share with you a lot of statistics to do with that as well during the election. We are in the last quarter before the presidential election, and that is another quarter which generally outperforms the market. So more metrics that do support and do favor that this is not going back to the extreme lows and the excessive fear that is there. The market is not representing that, and price is not representing that. So you best keep your bias aside and allow the numbers and allow the statistics to be used in your favor and build a strategy around that. Just a quick look at the dollar. We basically went to the top of the range, built a 3 drives pattern or a wolf wave, whatever you want to call it. Stop ran the highs over here. So it's good confirmation for adding risk onto the markets. I did show you last week that there is negative correlation. So it is always important to track multiple assets to build your case for this. So for now, we are heading towards the bottom of the range where I think we should get some kind of a reaction, and wherein there should be at least a bit of a correction in the indices, which would then signal to us where the next move has to be. I am still currently long and biased towards the upside for the indices, so I would be looking for a place to manage risk on certain names and watch if that dip comes. But nonetheless, I wanted to assert to you that use multiple assets to build your case, and the dollar was very clean and showed quite nicely at the starting of the week itself that we are going to be having a good probability of a strong move in risk on assets. Here's a look at gold. What I wanted to first show you is that even though we did have significant negative correlation for a while, I mean essentially from the March lows we had positive correlation for gold, but I mean we're getting back to possibility of positive correlation again, because this is due to the fact that gold is going to get strong the more of money we're going to print, so the demand will continue to rise. I did tell you we've had a very, very strong quarterly close on gold. We can take a quick look at it. So here's it is the highest quarterly close ever, so this is really strong, guys. Look at this quarterly candle. It is very full and it's very bullish. So in terms of that, I mean, we could have positive correlation. Gold could continue here, and we had a long consolidation all the way since mid-April, and we have broken up above that, and we've hit a zone of big resistance here. So just looking at the potential of a continuation, the really good level I have is in confluence with this VWAP, this daily level 1730, which looks like a very nice level if price can get here. If not, we'll have to look at this 1743, 382 aggressive retrace. But nonetheless, looking out for gold, setting alerts at these levels and watching for potential to buy another dip for continuation here. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!